Good afternoon, everyone. Thank you for being here. It's a real pleasure to have you at the I-270 Innovation Labs this afternoon. I see a number of familiar faces. For those of you that I haven't met yet, I'm Luis Rugeles, and I am the co-founder and CEO of the I-270 Innovation Labs. Before we start, I would like to thank our sponsors for their contributions to making this event a reality. There are St.john Properties, who happens to be our landlord as well. If you see anything here that you don't like, it's their doing. Anything you like is our doing. Workforce Genetics, Bane Bio, and OneUp Consulting. We also want to thank BioBoss, our event partner, for their help. I-270 actually is a sponsor of BioBoss as well. So we're going through very uncertain times, and our hope is that you go home tonight with some valuable insights as to what's coming next and how to best deal with what's coming ahead. We have, or to deliver on that promise, we have a great group of industry leaders and regional leaders, and before I introduce them to you, I would like to acknowledge the presence of a couple of special guests. Starting with you, Mike Gill, Secretary of Commerce for the state of Maryland, and I want to thank you for being here. Congratulate you for your recent naming as one of the most admired CEOs in Maryland by the Daily Record. Thank you for being here. Along with you, we have Heather Gramm from the Commerce Department. She's the Assistant Secretary for Business and Industry Development. Thank you for being here. And lastly, the Biohealth Capital Region is dear home to us, and launching the I-270 Innovation Labs in Frederick was a very deliberate decision that we made, and that's why we are so pleased to have here with us today Jessica Fitzwater. Jessica is a council member for the Frederick County Council. And why not say it, quite possibly quite likely, I would say, our next county executive in a few months. Would you care to join me and welcome everybody to Frederick?
Good afternoon. Good afternoon, everybody. My name is Jessica Fitzwater. I serve you on the Frederick County Council in District 4, which we happen to be standing in or sitting in right now. So I really want to thank Luis and Doug for inviting me here today. I had the opportunity to come and tour their amazing facility here probably about a month ago, and just really impressed with the ingenuity and clearly filling a need, because I believe at the time, and might have even changed, at least this was about 70%, full, with tenants doing some really just incredible, remarkable work. We are so happy and just thrilled with the progress being made in Frederick County in this industry. You know, we're the northern anchor of the I-270 corridor, and we really value our relationships with businesses within Frederick County, businesses that are coming here to open and expand, businesses that have perhaps locations in Montgomery and Frederick County, or even really nationally or globally. And we're just thrilled to be here today and to be able to learn from this amazing panel. Businesses, I don't think, really see county lines, and it's been something we've worked really hard in our Office of Economic Development, and I know some of them are here today, so that's great, to make sure that we're attracting and also being able to retain these businesses in all of your industries here in Frederick County. Being at this northern anchor of the I-270 corridor, and all of the businesses that are right here around Route 85 with Thermo Fisher and Illum and Rooster Bio and Bane Bio and many others, really at that gateway to Frederick County is just so exciting. But we also know with our FITSI, with our incubator downtown, co-located with our Chamber of Commerce and our Office of Economic Development, we're able to really build those partnerships, be responsive to the needs of businesses, find ways to work together and really help folks grow their dreams and visions here in Frederick County. We've seen expansions of AstraZeneca. We have Kite Pharma now in Urbana, just really bringing innovation and really exciting job opportunities for so many Frederick County families. I'm also so proud that our workforce development folks have been building relationships with our businesses, with our Frederick County Public Schools, with our higher education institutes, doing boot camps and other trainings to make sure that we're also building a pipeline of employees and really building this up as an incredible industry here in Frederick County. So I know that as a council member, I've been proud to support a lot of our legislative and budgetary commitments to help see these businesses expand, and I want to make sure that we continue that partnership and that progress in many years to come. So I'm looking forward to hearing from the panel today, and also really just wanted to welcome all of you to Frederick County and to the event this evening. If you see me sneak out, it's because I have a county council meeting this evening, so I won't be able to stay the whole time, but I'm really glad to be here, and welcome.
Thank you so much. Oh. Welcome. Thank you, Jessica, and best of luck from us for you in November. So I mentioned a minute ago that we have a great group of panelists, and would like to introduce them to you now. Next to Secretary Gill, we got Sarah Miller. She's the VP of Economic Development for Biohealth Innovation. Welcome. Next, we got Brad Fackler. He's the VP of Life Sciences for the Maryland Tech Council and also a member of the Business Continuity Task Force, if I understand correctly. Next, we got Pete Briskman. Pete is the Executive Managing Director for JLL. JLL is the largest, or one of the largest, if not the largest, real estate brokers in the world. And he also is the co-lead of their life sciences practice for the Mid-Atlantic. Thank you for being here. Michael Caspani is the Managing Director for BroadOak Capital Partners, people with money, right? Thank you for being here. Matt is Holbrook is the regional partner for St.John Properties, and he's responsible for West Central Maryland and Virginia as well. Chris Frew, I don't think Chris needs an introduction, but he's the CEO of both BioBoss and Workforce Genetics. Welcome, and thank you for your help with the event. And lastly, but not least, Doug Bane. Doug is the president and CEO of Bane Bio, as well as the co-founder of and COO of the I-270 Innovation Labs. Thank you. So I want to thank you all heartfelt for accepting to be in the panel today, and the contributions I'm sure you're going to make in the next few minutes. Can you help me thank them for being here? All right, so let's get started, shall we? As I said a moment ago, we are going through some very uncertain times. We just thought that the pandemic was behind us, and with that, our problems, and now we find ourselves in a very uncertain situation, both from a geopolitical and economic standpoint. China is dealing still with the pandemic. Europe and a housing market that is cracking. Europe is projected to shrink 2.3% next year, led by Germany with a 3.5% plunge. They have a war, they have an energy crisis. At the same time, most of the world, including the US, is experiencing the highest inflation in at least 40 years, and the highest interest rates and fastest climbing interest rates in at least 20 years. So against that backdrop, it is clear that the US and our region are escaping the worst of these ills. However, we're not immune. We're seeing, even though supply chain bottlenecks are easing and consumer spending and job growth are still relatively strong, we're seeing major cracks in capital markets, and as well as in key sectors as housing. Add to that the fact that a very strong dollar is a major headwind for American exporters, right? So what comes in the next 12 to 24 months is going to be likely very dependent on what the Federal Reserve does. Some people think that we will avoid a recession completely. Other things that we will have a recession, but it will be a shallow, perhaps long one. Yet others think that a major recession is the only way to break the back of the highest inflation in a generation. With that as a framework, I would like to ask our panelists how they see the region economy evolving in the next 12 to 24 months, in particular with respect to life sciences. And I would like to start with you, Secretary Gill. And if you would, before you answer the question, if you could give us a sense for how important life sciences is to the economic picture of Maryland currently and in the future, and what do you see as the strengths that we have that will be helpful to keep deploying as we go into these challenging times?
So I think, Louis, we're well positioned relative to life sciences, relative to the diversity of life sciences within the state of Maryland. Montgomery County and Frederick County, what tremendous assets and the great things that are happening. Let me just shift gears a little bit back to some of the things you were asking relative to the economy, the recession, things of that nature. There's a card I carry around all the time. Brett Schreiber's got one of them. Heather's got one of them. Tamara's got one of them. It's called the Big Six, and I'm going to pick out two of them specific to the environment that we find ourselves in today. And the first is face reality as it is, not as it was, you wish it were.
Sure.
I do my very best to live that way. I don't spend a lot of time on stuff I can't control, about maybe that much time. I don't listen to all the various talk shows and read all the papers just so I can figure out how to get my day off to a lousy start. I just focus on what are we dealing with and let's go. And there's another one on here that says, control your own destiny or someone else will. Because you see, at the end of the day, everybody here and all of you, there's something you do for a living. You know, there's priorities that you have, there's goals that you have, and you either control your destiny or some other factor will control it. So I do try to live by those two things. And all those other things that we can't control. Can we control the interest rate? No. Can we control pricing at the supermarket? Or no. So control what you can. I'll make a couple remarks about Maryland, as I don't have a crystal ball, but I think this is it's a fair forecast. It's a fair forecast. Fiscal 2022-23 was extraordinary, I think, for Maryland. I think most people would say that ain't coming around again anytime soon. The incredible amount of money that the feds pumped into everywhere in the country. You know, our tax revenues were up at the same time. So we had a combination of federal government investment in Maryland, once in a generation type investment, and then the tax revenues in the state of Maryland. Market was still high. People were selling assets. They were paying capital gains. This was a heck of a year. It ain't going to happen anytime soon. I would probably say for the next calendar year and into 2024, I think we should anticipate state revenues at best being flat. I mean, this is just the way I look at things. State revenues being flat. That's okay, as long as our expenditures match up with our state revenues. There'll be a new administration with little experience relative to, which I'm optimistic about the new administration. Let me say that. Okay. But at the same time, with minimal experience about running a state government. So you'd only hope that they'll be surrounded by people that can make a difference. But I'm optimistic. I think things are going to be flat. I think everyone should anticipate they're going to be flat, and if they're better, good for you. So pay attention to the details. You know, don't stretch beyond what's reasonable. And we'll get through 2023, but as a state, our strength is in our diversification of the industry sectors. There's not I remember a couple years ago, and then let me shut up because I've got all these brilliant friends of mine here. One more comment. Anibon Basu, everybody gets a kick out of Anibon. And when I got in this job the first time, Louis, I call this chapter 2. But when I was in the position chapter 1, I said to Anibon one day, I said, Anibon, think we got better assets than 45 of the 50 states. He goes, Mike, How about all 50? And as assets, we really do. I mean, there's things that we need to work on, but our assets are great. And there's not another state that can really match us in that regard. But again, thank you, Louis, and those are just some thoughts.
So I take flat any day compared to shrinkage, right? Like in Europe. So that's an optimistic tone in my mind compared to what's going on around the world.
Yeah.
Thank you so much. So the state of Maryland, I think, is very fortunate as well to have two excellent organizations that focus a lot on life sciences, the Maryland Tech Council and Biohealth Innovation. And your views obviously will be very valuable. Why don't we start with Sarah? Sarah, what do you see in the next 12 to 24 months? And Brad, if you can continue right after.
Well, unlike Mike, I worry about all the things. But like Mike, I continue to be optimistic. And so our role, as you said, we provide direct assistance to small biotech companies. And so while some folks up here are dealing with larger policy level things, and certainly our companies are in some ways, impacted by macroeconomic issues and challenges that we're all facing, my kind of vision here is just from like the people that we talk to every day, which is a very small sample size, but I think it tells you what it's like to have a business and grow a business in the region. I think, one of the things, and Pete and I were talking about this a little bit before, we hear about this region and there's always, it punches below its weight. I think it's something that we hear a lot, and too many competing jurisdictions and, not enough entrepreneurs because we're such a government-focused entity. But I think it's not true from what we're seeing day to day. And I think that while so many people suffered during the pandemic also brought a ton of funding to our folks, and it offered a lot of opportunities for people to accelerate their technology and gave them new venues for commercializing things. And again, not to minimize, the terrible toll that the pandemic took and then all of the economic ramifications after that. But I do think the life sciences is strong, and I would say also, not to be corny, but I think a lot of it has to do with the fact that these folks every day are waking up and trying to save lives. And I think that that is something special that we have in Maryland in the I-270 corridor that maybe other people in the region don't have. And I think that it just talks a lot about our character and I think our drive to do things and get up every day regardless of the challenges.
So worried but optimistic.
Always worried, but
Always
more
worried.
optimistic.
If you
yes.
don't worry, you have to worry, right? That's what they say.
Then I worry that
Yeah.
why am I not worrying? Exactly. Thank you.
Thank
you
you.
for understanding.
Yeah, you pointed out the economic issues that we are about to face. But there are a number of things happening around that could prove to be beneficial to Maryland. One is that because of the higher prices, one of the things we're seeing in the biotech field is that companies are moving out of high cost areas and moving to lower cost areas. The first place we saw that was there's companies that are fleeing New York City and moving to New Jersey. Kind of combined with that is that over the next year or so, we'll have 1 million square feet of lab and mixed-use space coming on board. So if people want to look for, and I should say that the cost of that lab space is about 1/3 of what it is in Boston. So if people are looking for more economic areas to move to, Maryland may be a good area to do. One of the things that we're also seeing here in Maryland is that as the availability of capital has begun to get a little bit more difficult, we're seeing a lot of more mergers and acquisitions in this field. I think that is an indicator that the marketplace, the biohealth, the life sciences marketplace here in Maryland is maturing, and I think that's a good sign. And then I think the other thing is that the convergence of the life sciences and the technology, which is really going strong here in Maryland, I think is a factor that will build additional resilience into the marketplace.
So you think those factors would help us to do a little better than others?
I
guess what hear
think
you saying.
that gives Maryland a chance to come through this a little bit better than some of the other areas.
All right. Thank you. So one of the key things to look at in my mind for determining where we are and where we're going is commercial real estate. And I'd like to ask Pete and Matt. Pete, if you could start, please, first. Again, what do you see in the next 12 to 24 months? And if you would first tell us how important is life sciences to your business. Same for you, Matt.
Okay, great. Thank you. And thanks for hosting. What a great venue, by the way. The compelling indicator for us is employment data, because employment translates into headcount, which translates into square footage and the need for space. And when you look how we compare right here in Maryland to other regions, we look great. I mean, first, we were just named number 4 by Genetic Engineering News. And that takes into a number of factors that you just mentioned: venture capital, M&A activity, availability of real estate, pricing. But employment data since COVID, we're up 13.5%. And you look at the other regions, it's not necessarily the case. So that is cause for us to be very optimistic. And I've been fortunate enough to work with tenants coming to Frederick, such as Illum, and when they compare different jurisdictions to each other, a lot of it is outside of the real estate, believe it or not. Mm-hmm. It's tax structure, it's incentives, availability of labor, very specific labor. And as we sit here today, we look quite strong. So I'm very optimistic. In life sciences, to address your question directly, sure. It has become one of the most active parts in terms of industry growth within the state of Maryland. And other sectors would be industrial, some data center, and Matt can talk to that as well. And vacancy rates are down for life sciences. Office space, it's up. However, venture capital for office space is also up, and funding of government contractors is up, but the vacancies are down. So that tells JOL and our analysts that, okay, if venture capital is up, M&A is up for both office and life sciences, but life sciences is actually growing and the vacancies are lower and life science users are taking more space, that's a pretty good sector to follow, not only in real estate, but as a state and locality. So very optimistic.
All right. Matt?
It's on. I have learned over my career that if I can follow Pete Briskman in and just agree with him, I generally sound pretty smart. So I totally agree with everything you just said, Pete.
I've been drafting off of you all my career, Matt.
So I sort of look at the evolution of things as well. And we were doing lots of defense contractor deals 15, 20 years ago, right, Heather? Lots of those deals in the death sciences. So it's refreshing to be now more so in the life sciences. As far as the future and our outlook, I would say the same. And I think we are aware but optimistic as to what's coming and where we are coming from. I think we have the benefit, as you alluded to, but I think in this area we are specifically fortunate to have Uncle Sam down south. And so if you look at the dark, stormy clouds that are potentially ahead of us, the fact that Uncle Sam is likely to want to increase spending if the economy goes into recession. The way they do that is through giving more money to government contractors doing good work. A lot of that money gets deployed here in the local capital region. So I think even if the storm clouds are dark in the future, they're softened for us here, as proven by previous recessions that we've all lived through. So I think we're in a great place. Honestly, we're in an enviable place compared to the rest of the globe. Everyone would like to be where we are right now. The other thing about the future, I'm an optimist, as you can tell, but the things that make us great aren't changing in a recession. We have the universities, we have the talented workforce, we have NIH, we have NCI, we have all those great things that the recession can't take away from us. So as far as the value of life science, I would just echo again what's been said, but we have a little bit of a different take on it, which I would say all the small businesses, all the mid-sized businesses, all the startups also are an amazing resource, an amazing contribution to the economy that go into life sciences. And we all know the big name brands and the big international companies that make big splashes and big headlines. But for every one of those, there are 100 small, mid-sized businesses that are doing great things in the state of Maryland. So we're really grateful for them, whether it's the direct folks like the vivariums or the repositories or the support labs or those uses, or even all the indirect industries that support the life sciences, the cleaning companies, the people who sell and service emergency generators, all those folks as well contribute to the economy. So I'd say if we look at it holistically, it has a huge impact for the state.
And how important is life sciences to St. John properties specifically?
So I would say very important. I'd say it's been growing. It was growing prior to the recession, and it seems to be, obviously, as we all know, it got a shot in the arm for COVID. So I would say it's been growing more so. It's about, I'm looking at Danny Foyt, who runs our leasing here, it's about 20% of our portfolio here in Frederick. Nationally, in 22 million square feet, it's probably less than 3%. But here, it's a big deal to us.
Great. Matt, also, do you see the market currently as being balanced? In other words, do you see supply exceeding demand in any particular segment or footprint in particular? And Pete, I would like to
Pete,
hear.
what should I say?
I think you know, Matt.
So is it balanced? I would say that from afar, it's easy to look at the industry as very homogenous. It's just life sciences, right? They all kind of do the same thing. Everyone here knows that that's absolutely not the case at all. There are the big biomanufacturers that need big campuses and parking lots and lots of employees, and they need a more affordable facility and affordable workforce. Then there's the C-suite people that want the corporate headquarters, and then there are all the contractors that we've talked about before. So I think it's really hard to parse out each individual section and answer the question as to how that goes. So it's a hard question. I think we look at it and say it's probably kind of lumpy. Some sectors will gain, some will shrink. One of the things, and Pete, I want to hear your thoughts on this, but one of the things that we also look at is this phenomenon, which is life sciences were growing prior to COVID, right? Everything was on the upward trajectory. COVID comes along, things accelerate very, very quickly. All developers think the same way, and all landlords think the same way, and we all jump in and do the same thing at the same time. So if you were an office landlord prior to COVID and then into COVID, you were thinking to yourself, this seems to be a growing trend, there's lots of money going to it. How can I reposition my office building to accommodate these type of uses? If you were a landowner and you had a piece of property, you would also be saying, how can I reposition what was going to be an office building, but there's no office demand? How can I reposition that to be a life science facility? So all of those facilities are kind of look like they're going to be coming online at the same time. I mean, a lot of that effort and a lot of that work is going to be hitting at the same time, right about the same time we're staring into the eyes of potentially a recession in 23. So it's a question mark. And I think time will tell as to whether it all gets absorbed or we're looking at some longer and protracted times to absorb all that space.
Do you agree with Matt 100%?
Always.
Smart person would definitely agree with Matt 100% because he's usually right. Maryland has been conservative with construction, particularly spec construction. So between 2015 and 2019, there was this pent-up demand, and there were all the fundamentals fueling growth for life science users, but we didn't have landlords from out of town that were recognizing this, and landlords that were pre-existing weren't building speculative buildings. What they were doing is building pre-lease buildings or suites one at a time. So what we're seeing now is building conversions, office into lab, to accommodate the pent-up demand. We're seeing new buildings on a speculative basis all around here. And we're seeing incubation and suites, spec suites, where the early stage companies can go and take space and preserve their capital. But in any industry, if anything is overbuilt, the spigots will turn off. And so, Matt he represents the top tier of developers at St. John Properties, and he'll just stop developing if there's not a lot of demand. And so because of that factor, I think that there'll be an equilibrium. I do think that there is excess Class B space, older buildings, and that could be a problem because those older buildings are being left behind, and tenants are trending toward higher quality buildings. So that's a bubble potentially, and those buildings will have to be repurposed. And then transit-oriented development, TODs. When you compare our region to other regions, they're a little bit more urban in some areas, so we just have to keep that in mind because we're actually maybe behind the curve on that.
Great. You already answered my next question. So we're seeing a little bit of air pockets here and there, bubbles, if you would. And I think for the audience, it'll be hard to hear what we just heard from any two individuals in such a concise manner. So thank you for that. I would only interject that our observation here is that we see a number of conversions that are conversions on paper, not necessarily a true conversion. So perhaps there is a factor as to how much of that is a reality and not, right?
Right. These landlords are getting the permits for conversion, but they don't necessarily have to execute on it. To your point.
Exactly. Thank you. All right. So moving on to another area that's quite important to determine where we are and where we're going. We'd like to talk about the market for talent. This is an industry that is very dependent on educated employees and the like, and the pandemic has to some degree changed the balance or the relationship between the employer and the employees, their attitude towards employment and the like. And Chris, I think you have one of the best vantage points in the region as to what's going on in that particular segment. So has the pandemic changed the labor market in life sciences the way it has in other industries? In other words, are people less willing to take on certain conditions, certain pay, certain arrangements, or nothing has changed?
I don't think anybody can say nothing has changed over the past 3 years. I think if you're in the talent acquisition space or recruiting or HR, the past 3 years have been like the playoffs. I mean, it's constant adjustments. We're changing the game plan because it changes every year. So yeah, the talent market and what employees are looking for and their approach to jobs has fundamentally shifted, and to where employees now do have more, I guess you could say, of the say or control. There's more companies are having to do for their employees than ever before. I think we all came through a pandemic and we all realized, hey, life is important. There's certain things that I'm going to hold over top of a salary or a paycheck, and that's just a reality we're all experiencing in every market. Now, for life sciences, where we really are strong, and I think where we need to lean into and rally even more, is that we're here for a mission. People aren't going to stop getting sick because of a recession. Public health isn't going to not be into priority because of a recession or whatever else is happening in the world. And the generations that are coming up now, and really for all of us have come through this pandemic, working for a company that is mission-oriented, that you can go home at the end of the day and say, I did something today that's going to matter to somebody, and I'm proud of it, my kids are proud of it. Like, that is absolutely one of our greatest assets as a community. So I think that's where life science is coming out strong in this market. A lot of companies have learned how to hire remotely, which is helpful in life sciences. So there's been, I think that's a net plus for a lot of life. 3 years ago, you're like, hey, I want to hire a third of my workforce remotely. People would have laughed at you, but now it's just part of the game. So I I think that, you know, to pull something from your first time in your chair is, you know, I'm bullish on Maryland, and I'm bullish on talent in Maryland. I still have that pin, by the way. So I'm bullish on the talent market in life sciences, you know, for that reason, and because, you know, again, a couple things. We have, well, let me start with this. So in 2009, we started BioBuzz with the mission to build a more connected biotech workforce. Now, why we started that? Because in 2009, if you remember, there was high unemployment. In Maryland, we lost 4 major manufacturing companies. So the actual Maryland climate for biomanufacturing was not what it is today. Now we have a state that is all in on biomanufacturing and is supportive of that, and we're investing in that. We're attracting companies like Loom and Kite. We are bringing manufacturing in the state. So when I look at 2009 versus today, you know, I see 2009 being a recession of high unemployment. I see 2022 and 23 as potentially a recession of, you know, continued employment. It's going to be more of an economic recession than a workforce recession. And so, and again, I go back to that people aren't going to stop getting sick. So the manufacturing is going to continue. And a lot of, you know, and you know, you might be able to speak with this more than I can, but a lot of investment in earlier stage life sciences is done in 18, 24-month cycles. So a lot of the hiring that we're still getting as a recruiting firm is still being done, you know, because people are growing for a milestone that's in 2025. They're not growing for a milestone that's in, you know, December. And I'll just close with lastly, I mean, if anything, your introduction and is a commitment to this, but like, we have each other, like, and Maryland has evolved and grown and to where collaboration is how we do business. And I think that's another strength that life sciences in Maryland has, that, you know, throughout it all, again, we can control our own destiny because, you know, even during hard times, there's a lot of support. I mean, look at this stage alone and the audience here. There's a lot of support for the mission that we're all on.
Great. As far as remote work goes, actually, we've seen here, we have people that have set up shop here to do research and development for companies that are out of the county or out of the state. And that's
I met one of your tenants from Brazil.
there as well. So, you know, that's a trend that we have seen and that has helped us as a business as well. What about inflation? Are you seeing salaries keeping up with inflation, or do we have a situation where people are switching jobs more frequently, trying to stay leveled, if you would?
The talent market was seeing that during the pandemic in Maryland. So we have a lot of clients who are like, come on, 3 years of like salaries jumping 10% every year. This is not normal, but it is the new normal-ish, I'd say. I mean, during the recession, there was so much activity in Maryland because of our assets. Probably 1 out of every 5 people, you know, 20% of the people we put to work and we recruited for our clients, we were relocating into Maryland, especially in biomanufacturing. And so the market has been so hot that salaries are going up. Now, the inflation has caused an extra element to that where, you know, I send someone to one of my clients at $100,000 because that's what they start off the conversation with, and then they start looking at inflation and they look at their grocery bill in the matter of 3 weeks, they're like, actually $120,000? And that's happening, you know, on a regular.
So are employers responding to that, or are people moving on?
Yeah, no, employers are responding, and they're having to go back into their workforce, and maybe not a 20% jump. That's, you know, maybe I'm exaggerating a bit, but I think there's I think it will right size, and a lot of employers are trying to combat that and offering. There's a lot that you can offer in lieu of that, especially in life sciences like equity, and a lot of biopharma companies too. Like they have great benefits programs, so there is elements that combat the inflation, but it's something we have to, you know, like nobody's going to be able to hide from that.
Right.
It's just a matter of the state we're in.
All right. And so it sounds like from all you say that it's an employee's market, if you would. however, with valuations coming down for biotechs, what's going on in the economy as a whole, have you seen any changes in the last 3 to 6 months?
Yeah.
Any reduction in hiring, any increase in layoffs, anything?
I think, especially in public companies, there's more conservative approach that is taking place. Some of the venture-backed growth companies, some of the same, but they have a hiring plan that's, again, like the 20-month hiring, 24-month hiring plan. We're also seeing that, like valuations and stuff like that, like it's not changing the salary levels too much. If a company's valued less. I mean, there's, again, we're all competing for talent in the same pool. Like, with recession or without a recession, we're competing for the same talent, and it's specialized and limited. So
you haven't seen any layoffs yet?
I haven't seen any layoffs, and I'm not hearing a lot about layoffs. I think some companies maybe that are in support areas that, especially in, there might be, but I haven't heard a whole lot in our area about that.
That's good to hear, because you probably know better than most of us here. Thank you, Chris.
Can I just say one comment on the labor?
Sure.
That can be a deterrent, and we just need to be careful that it's sometimes a double-edged sword, because there's all this labor and a high concentration of PhDs, but when organizations are doing national site selections, if the labor costs are too high, we actually get pinged on that. So just something to think about.
All right.
Yeah, that's a good point. So we have so obviously facilities is a big cost for companies, but the largest cost for anybody to do business is people.
Yeah.
That is the number one cost for doing business. And I think we do have a more moderate cost of living, especially in Frederick compared to Bethesda.
Definitely.
Or Potomac, or Northern Virginia, or Boston. Yeah, so Boston. So we have a more moderate cost of living, and I think that does weigh in our favor in some of the site selection elements that people look at. And as a recruiter, and I know other HR departments have to do that, you have to manage expectations when you're relocating someone from a Boston, down here,
Sure.
because
money is going to go farther.
Yeah.
Sure. Thank you both. Moving on and trying to keep with the timeline here, want to talk about another key ingredient of the industry, which will be capital. And Michael Caspani, this is an industry that is not only highly dependent on talent, educated talent, but also capital intensive, with development cycles that are long, many times risky. So I'm very interested in your views as someone that is representing an organization that actually deploys capital as opposed to being on the other side of the table, which we run into quite often. In fact, your organization has invested, if I'm correct, somewhere between $5 and $6 million in one of our members, Camp Proteins, recently. So with that, I wanted to ask you, what has it been like to, for a moment, get yourself in the shoes of your client, if you would, but what has it been like to raise capital in 2022, and especially in the last 2 to 3 months?
Sure, and sorry for being late. There was actually a traffic jam on 270, so it took a little longer. So it's a funny question to ask us. We like to say that we timed this perfectly, but we actually raised so there are 2 different types of entities trying to raise capital, right? You have the funds who are investing that capital, and then the companies who are trying to raise it from those funds. Just like we drew it up, we closed our latest fund in May. And so we basically had a war chest coming into this current climate. And I think there were a lot of other funds out there who did the same. And there's actually a remarkable amount of dry powder that's out there right now in the VC community specifically. So we got lucky. I think, I even think there's a thesis to raise money in this current climate, because if you have a pipeline full of investment opportunities that you think you can go and get at attractive valuations, then that's certainly something to raise capital around. And I think if you look at a lot of the funds, the fund vintages that essentially indicate they were raised coming like right at the great, global financial crisis. Those are some of the best returning funds in history, right? And it's kind of across the board. So I'd say on the side of the companies themselves, it all kind of depends on the type of business you are. I think life sciences tools and instrumentation businesses, biotech companies that have a big tools or instrumentation focus, the public equities got hammered over the last 6 to 8 months, and it's kind of across the board. And it doesn't really matter, whether you're growing revenue. It just maybe you'll go down a little less than everyone else had, but it's been pretty grisly. On the private side, I think the comment I'm about to make is a bit more specific to this general region here, right? You have a couple. You have, I guess, several factors that are in play right now, right? So I guess on the negative side, you have the fact that certain companies did really well coming out of COVID, and they're kind of riding this sugar high. Maybe COVID was a catalyst for them, especially if they're involved in like vaccine development or infectious diseases. And so now the question is, everyone's trying to figure out whether these companies are going to be able to sustain that growth that they saw during that kind of artificially juiced period. And a lot of that comes down to whether they're able to find new applications for capacity that they, were utilizing during that time or not. But on the flip side of that coin, you have really favorable dynamics specifically for this region, of which I'm sure everyone here is aware. You've got, first of all, the NIH local. Their budget keeps going up every year. It doesn't matter whether your president is Biden or Trump. So that's positive. Drugs that are, in clinical trials or in the pipeline, they're all getting increasingly complex, and they require, more technology. And there's a growing need for, innovation across biotech. And so as long as these two things are happening, plus a lot of this dry powder in the VC community, there's going to be a ton of support for these small up-and-coming biotechs, whether it's a tools company or a services company. So, I don't think that I think valuations might take somewhat of a hit, but it's not necessarily going to, in my opinion, a lot of it's going to come from, and I'm saying this, I was just earlier this week at a kind of lower middle market M&A private equity panel, and a lot of the folks there were credit providers, so senior lenders and some buyout guys, and their take was the credit markets are going to be tightening up. Obviously, you're going to see a lot of the same stuff you're seeing in the housing market. Money becomes more expensive, so home prices ultimately over time start to reflect that. Similar things going to happen in the corporate world, and that doesn't exclude life sciences. I think the requirements for these companies to access capital will get a bit more stringent. And maybe valuations reflect that, but I don't think it's anything more than that, because I think you still have these strong tailwinds. You still have the fact that people are trying to, save the world, so to speak. And frankly, there's a lot of money out there that does need to be put to work. I mean, I talked about funds raising these war chests coming into this period. They look really bad if they raise a bunch of money and then can't invest it in companies, right? So that can sometimes lead to people overpaying. And that's on the private equity, private credit side. I'd even say on the, strategics looking for value buys in a time where valuations might go down a little bit. Ultimately, I don't think anything's going to change when you think about big industry consolidators, whether it's big pharma or companies like Thermo Fisher, Charles River, et cetera. They've got a history of overpaying for things that they really need. And I don't think that's really going to change now, especially when you look at like manufacturing capacity for anything that's GMP related or touching cell and gene therapy. People will pay for manufacturing capacity that they can just bring online immediately versus having to say, hey, let's just spend money on this and it'll be ready to go in 2 years.
Right, so the market, the stock market has come down significantly, right? And biotech even more. So we should see some even more activity by big pharma in the region as well.
Yeah, sure. I mean, like I said, I don't think it's going to change if a larger consolidator says, "Hey, we've got demand to manufacture more of X." they're going to go out and find someone who has that capacity, and they're going to pay whatever they need to pay for it. That's been happening in the past. I don't think that's going to change.
They're price inelastic, I guess.
Pretty much. Yeah, and but I'd also say that, that makes it look like big pharma and, the Charles Rivers of the world are going to take over the world. But it's probably a good segue into what we liked about Kemp, what we like about a lot of these other smaller businesses that we see. So the big consolidators get really, really busy, and it's it's hard for them to justify taking on like smaller batch customers, right? So everyone who's trying to get space like on a manufacturing line with a giant company, it's tough, because if you're not a really massive customer that's going to move the needle, you just keep getting deprioritized while larger batches come in. So, and likewise, that's more on the manufacturing side, but on like the actual services side, like a CRO, for instance, CROs and CDMOs, like, okay, so let's take Kemp. Another thing that happens with, competitors to Kemp, for instance, who get acquired by the bigger companies like the Eurofins, et cetera, they get absorbed into larger companies, and then their customer service starts to kind of fall off a cliff, right? And so that makes companies like Kemp, for instance, really, really attractive, because they maintain this super high level of customer service. The person you're speaking with, if you are a potential customer, you're dealing with, a scientist, not just some account manager who has 2 years of experience and is still kind of learning how to speak the language. And so what we see in businesses like that in Kemp, and what we loved about them is, they've been able to bootstrap themselves, be really successful, and maintain this super high level of customer service, providing bespoke solutions to really important customers. I mean, some of them, yes, are like smaller biotechs, but some are larger pharma businesses, and that makes them that makes their customer base very sticky. So yeah, we provided growth capital to them, and we're excited to keep working with the team.
Great.
Yeah.
We work with them on a daily basis as well. One last question. So you mentioned NIH, government funding and the like. The SBIR program and the STTR program are very important, obviously, to the region, and they need to be reauthorized by Friday, I heard. And the Senate, I think, went ahead last week. I'm not going to ask you what the House is going to do by Friday, but I would like your thoughts on what would happen if, those programs disappear. Nobody's saying that, but how critical are they? And to what degree the fact that they are not permanent, but they get reauthorized every 3 years, play a role? If you have some thoughts on that.
Yeah, this is going to be kind of speculative, because I guess where BroadOak invests is a little bit later stage generally than very earlier stage companies that are spending a ton of time applying for grants. Usually by the time we come in, if they are even still receiving grant funding, they're more or less starting to phase it out or have already phased it out. I guess maybe this is naivety, maybe I'm just bullish, but I honestly think that if those programs went away, something else would pop up to replace it, because this is important stuff we're talking about. I think, not that I'm a proponent of the government necessarily like interfering too much with private businesses, but I think it is important for the government to help with innovation, especially with something as important as healthcare and drug development. I mean, there's no doubt that U.S. should be like on the forefront of that, right? And I think, yeah, I would think they keep doing it. And look, I mean, the RADx program, I think everyone here is pretty familiar with that. Definitely provided a lot of funding to companies during COVID. I mean, I just talked to a company today that's still receiving that, and I think they mentioned that that's going to be, they're basically like developing a new program for that, I think. I mean, I don't want to get into the specifics, but my point is that there's always going to be something like that. And if that fails, then, like I said, there's tons of dry powder in the VC community. And what we've seen is companies that, I joined BroadOak 5 years ago. We invest in smaller companies, but when I started, part of our differentiation was that we kind of would target companies that had a capital need of below a certain threshold, because that allowed us to basically fill a gap that other capital providers could not, because it wasn't big enough to move the needle for them. over the course of less than 5 years, we've seen a lot of players in the, I guess, financial sponsor space who, I guess, traditionally played a lot more upmarket. They've been coming down, 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 and creeping into this little area that we thought was our end of the pool, because that's where they're seeing really outsized returns. So the reason I say that is there's a ton of dry powder in the VC market, plus I think that people will continue to kind of creep down market.
It's all about risk tolerance too, right?
Yeah, sure.
Sarah, would you have some thoughts on those programs?
Could you tell from my shaking head? So first of all, the House is going to take the SBIR STTR bill to the floor tomorrow. And so it's expected to pass with bipartisan support, which is very good for everyone nationally and also BHI specifically, but especially Maryland. It's one of the earliest and the biggest seed investors in the country. I think that when we work very closely with companies who rely on SBIR funding. And when you talk about, life sciences and the local economy, but also equity, right, in entrepreneurship and technology, that is a big piece of it. And so we have EIRs who work, the National Institute on Aging I had not even heard of them before starting at BHI. But they are hugely influential in equity with scientists and entrepreneurship, and they do a lot of pilot projects that then will be replicated throughout NIH. I think that's really important. Specifically for BHI, it's important to us because within the commercialization piece of the bill, that is where our EIRs are funded. And so our EIRs, for those of you who don't know, we have 11 or 12. Don't tell Rich I forgot. 11 or 12 of them who are scientists and experts, and they really delve deeply into the commercialization of products with companies. And so that, again, is hugely important. But thankfully, we won't have to know what happens if that doesn't pass, because I'm confident that it will.
Real quick, please.
Yeah, real quick, I just want to, and Secretary Gill might be able to speak to this better, but programs that are also beneficial to our region, I think maybe probably support deploying some of that dry powder to work even more. I mean, we do a lot of work with venture-backed growth stage companies, and so many of them utilize the Maryland biotech tax credit. That's a funding in Maryland that Maryland has, and then a lot of them are also coming out of Maryland Stem Cell Research Fund grants. So I think bringing it back to the capital region, I think aside from federal, what happens with federal, in Maryland we have a tremendous amount of early programs that support our community that probably then help companies get to where you come into play.
Thank you. Let's move on to another data point in the situation that we're experiencing. So, Doug, your business is many times in the middle of companies growing, downsizing, and in between. Can you tell the audience what your business does and what are you seeing currently? How is it different or similar to difficult periods that you've seen in the past?
So, thanks, Luis. Bane Bio is a reseller of pre-owned lab equipment, primarily to startup companies, small businesses, academia, companies that don't have a lot of capital for their investment in equipment. We also provide services locally to all size companies, small to large, anybody that needs some facilities help, some logistics help, lab equipment repair. We can satisfy those needs. So the question was, more, I am involved in a lot of small business where they're either closing down their facility or they're moving to a new facility. And, so I see a lot of, through the years, I've seen a lot of companies come and go. Currently, I'm not really seeing a lot of that. I think there's a lot of companies, starting up. I'm not seeing quite the same level of companies that are kind of closing down. And from my perspective as a small business owner, I can gauge everything based on, hey, is there equipment to buy? Is there something out there that people are offering? And usually if people are offering equipment to buy, there's a reason that's happening, whether they're consolidating their businesses, their organization, or they're looking for, just to close down the business. So, for me, when there's a good supply, that's good for me, it's good for my business, but not necessarily good for the economy. But I think, what I'm feeling now is, Bane Bio started back in 2009, and, that was about the time when the previous recession was ending, and, it was a hot market, really, for startup companies. There were a lot of startups. I remember back then there was a lot of companies that also were petering out at that time, too. So it made for a good time to start a business, for one. And then secondly, it created a pretty steady market for the next several years until the pandemic. And then the whole world stopped for a second. And, there was a big push for equipment and for supplies. And, the supply chain disruptions just caused this terrible pain for everybody for lab supplies, just basic stuff that people couldn't even get. They were coming to my eBay store to buy, just secondhand consumables, just anybody, because they couldn't get their hands on anything. So, I think right now, the 2022 kind of reminds me of when I first started, except without all the businesses going out.
Thank you. I'd like to shift gears there. So everybody sounds pretty optimistic, but we may still have a recession. So what measures should the government have in place should times prove to be worse than what we are anticipating? I would like to ask that question from Sarah and Pete, and then ask Secretary Gill what the state has in place should we go into a situation like we don't want to go into. Sarah, maybe you first.
Sure. I have a big 6 card now, so it should help me with my answer. So in terms of implementing things, I think it depends on what the situation is. And so, and the reason I say that is because I think, back with the previous recession, like 14 years ago or something, the structure of that was very different than the inflation-based one that is now. And so I think to pick out specific things to implement, I'm not sure what we would need to do right now. I think the theme, though, that I would say policymakers have to have from a state level and also a local level is don't forget about entrepreneurship. And I know I keep saying that over and over, but I think especially, I was working in Montgomery County during the big recession. And one of the things that I think we did not do well was that we were too nervous as an administration to really think about, okay, this is bad, but it's also an opportunity to spur entrepreneurship. And when you think about, I think Reach Advisors came to town a few years ago to talk about what was happening in Montgomery County, and obviously when you go back over time and you see, with life sciences in particular, Boston took off after the last recession, and he talked about, James Chung talked about the fact that there was such a concerted effort to help entrepreneurship and infrastructure for that. And so I would just tell anyone who will listen, if you only have enough to do one thing policy-wise with economic development, that should always be the thing.
Very good point. Pete?
Good answer. I agree with that. I do, actually. Yeah. Labor. It's a known fact that we have the highest concentration of PhDs, but we also need to have a skilled workforce that doesn't have PhDs. Reason being, companies from outside this region, they don't necessarily hire PhDs. Manufacturing, they may need tech ops. And so if we can create training programs, that will be very important to attract and retain employers. The second piece is, I think we're doing a great job on incentives, specifically the MJM incentive from the inside out, inside that tent. These companies, that's meaningful. They've really enjoyed the benefit of those manufacturing dollars. So to the extent that we can continue doing that. And then, of course, being in real estate, there's the real estate side, which is construction costs are escalating. Supply chain is challenging. And so that'll cause rental rates to go up. And one of our competitive advantages that we are a third of Boston, New York, et cetera, and that's meaningful as well. So I think that we have to somehow manage those costs and not overbuild.
Secretary Gill, should we go in a recession? What do we have in place, if any?
I got into the position first time, Chapter 1. I read an article that said that there were 500,000 companies in Maryland. I thought that's pretty cool. Big guys like Marriott and Lockheed Martin's headquartered here, McCormick, T. Rowe Price, they're all big guys. But you know, about 90% of those 500,000 are small to medium-sized guys. And the common denominator, and it just sort of struck me at that time, is they're all customers. So in Chapter 1, with people like Brett Schreiber and these great folks here that had Brett, who was part of Team Commerce and now at Fulton Bank, and these great people that run important parts of commerce, the culture of yes really was something we created that said to customers, how can we help you? First of all, everyone was shocked. Like, wait a minute, aren't you government? You're saying, how can you help us? You know, in the old days, businesses would say about government, look, our fondest hope is that you just don't hurt us. Mm-hmm. If you were to actually help us, that's a bonus. Right. So we spent that 4 years, the next 4 years, the culture of yes. And it really worked. I mean, the thing I would also say that the state of Maryland and the new leadership, I hopefully will think it through if they're tempted to go in a different direction in a couple key areas. And that would be on tax policies, regulatory policies, no new taxes. You know, Larry Hogan, 8 years, no new taxes. Previous administration, 43 new taxes. And here's what happens in those states. And by the way, it's 100% consistent. Those states that have the most favorable tax structure, favorable doesn't mean lowest, favorable means favorable. Those who have the most fair regulatory environment, fair means fair. You have to have some, but it means fair. And who have a pro-economic, in general, policy about how we approach things. They consistently grow the fastest in population, they grow the fastest in jobs, they grow the fastest in income, and they grow the fastest in GDP. It's accurate 100% of the time. So if there's one thing we want to do in Maryland, which would be a disaster, is to go into a little bit of a spiral, and all of a sudden find there's a new tax that has some substance. There's new regulatory policies. That would put Maryland into a recession.
So that's what not to do.
That's what not to do. And because we really do have momentum right now. We've got real momentum. And all we really want to do is maintain it, keep it going.
Thank you.
Good.
Louis, can I add something?
Next question is for you.
Well, okay.
So,
okay. Well, let me add this because
real quickly.
It's pretty quick. Not long ago, the Tech Council commissioned the Milken Institute, and they did a report on the biotech marketplace here in Maryland. And they made some recommendations as to here's what needs to be done. And I think we've hit on a lot of those. But the one is, they said, enhance the talent pipeline. Mm-hmm. And we've talked a lot about the PhD levels, but the jobs that we're hiring, these manufacturing jobs, are high school degrees, bachelor's degrees level. So it's kind of all these levels. The other is to leverage our manufacturing strength for biomanufacturing. And this is an interesting dilemma because most of our general manufacturing is in the east of Maryland and in the west of Maryland, and our biomanufacturing is in the central Maryland. And so if we can leverage that, that helps build that asset. And the other is increase coordination among all the agencies. And that's the government, local, state, it's the private, it's the BHI, it's the tech councils, it's the biobuzzes, and all work together to
makes a
move
lot of
this forward.
sense. Thanks, Brad. Brad, so moving on to, should we have a recession? We talk about government. How about, let's talk, about executives and leaders at the individual level. I think you have done a great service to the state as part of the Business Continuity Task Force that was put together because of the pandemic and so on. and that probably has given you a lot of exposure to, what happened and how people navigated that crisis. What do you think are the things that are going to be helpful to leaders and executives to maintain their flexibility and their independence, if you would, and get to the other side of the tunnel should we go into a recession?
Let me just say a couple of words about what the Business Continuity Task Force is so that people know. Marty Rosendale put this together at the very early part of the pandemic because he saw major impacts that the pandemic was having, that the COVID was having on businesses. What we did is took executives from the venture mentoring services and built this team of executives that we called the Business Continuity Task Force. Now, unlike the VMS, which is a longer term, the Business Continuity Task Force, we think of it as a triage. So it's meeting with the executives of the companies, finding out what their issues are, and then pointing them in the direction of where they can get resources, where they can get assistance. What's interesting is we saw the evolution of the issues as we went through the pandemic. At the very beginning, it was, how do I survive? Then it became, how do I deal with a workforce that is now not on site, that they're working remotely? Then it turned into, how can I reach my customers and my clients when I can't see them? And then it was, how do we bring the people back to the office and the labs safely? And in this space, we had to come back earlier because these are lab-based companies, and they had to come back. And then it was, do I have an opportunity to pivot to take an advantage of an issue that came from that resulted from the pandemic? And then we've moved now into, how do I leverage my resources into industry, into better performance? And so it's kind of coming back full circle to now doing business. But it's interesting because these executives have said, how do I build a resilience into this? So having learned from that experience, we've helped 127 companies. These companies have hired over 100 people, and those companies that hired, that's about an increase of about 30% of the workforce. And you have to understand these are companies that were having trouble when they first came here. These companies have raised over $60 million of capital. So it's a program that works. And so if there's young companies here that might find this useful, look me up after this. But I think this is one of the things that was done and was really key here is identifying that there's a problem, and we have a wealth of experienced talent, i.e. old guys, that are out there, and to leverage that into specific kind of triage kind of uses.
Great. Doug, you're a small business owner, and as I mentioned before, or you mentioned, you interact with a lot of small companies that are in flux many times. What do you think are the ways that those leaders can navigate a recession or a hard time should we go through one? What are the key things that you would advise?
I guess first and foremost, I'd say cash flow, having capital on hand, and then the other things would be the workforce, of course, you're making sure that you can retain those people as things happen. And then, the not overextending yourself and just, kind of just staying grounded and utilizing companies like, the services that Bane Bio provides, taking advantage of pre-owned equipment as a way to kind of save some money, save your capital. And then, of course, real estate's a huge thing for a lot of these companies, which is why, places like the I-270 labs exist, which is why, Luis and I kind of, are on this journey to bring this to fruition. We see it as a real help to small business, not to get caught up in, long-term leases, and if they maintain flexibility to be able to manage and take advantage of, places like this. This gives the, people that take up residence here, a real advantage in terms of flexibility, because, they have a less than long-term lease. They can utilize that, and the cost savings, really, it's hard to measure, but I think it's a great deal for the tenants of this place, because they're not having to, they're maintaining flexibility. They can grow if they want to grow. They can, if it's too much space, they can always shrink and maintain operations. So I think, that would be how to keep your head above water.
Thank you. Couldn't say it better myself. So I think it's been a fantastic conversation. I hope the audience agrees. I would like to pose the last question. Should we go into a recession or not? Certainly, I think everybody agrees that it's not going to be as great as it was in the last year or two, right? And to take advantage of opportunity, you have to be in the lookout for the signs of opportunity coming along, right? So I would like to ask everyone in the panel, what will be the signs that you will be looking for from your vantage point as we move forward through the next 12 to 24 months to identify the early stages of a rebound, of a growth period? It may be not in 24 months, it may take longer, but what should people be looking for to shift gears and try to take advantage of another growth wave? Doug, why don't we start with you?
I think one of the first things that pops in my mind is the supply chain. Once the supply chain, is back on track with some of the critical needs for labs, they should plan ahead and make sure that they don't get caught, with their pants down, after if things disrupt again.
Chris?
Keep an eye on the job boards. Seriously, if you start seeing a lot more jobs get posted, it means the economy's getting more healthy and people need to hire more. So if you keep an eye on the job boards and you start seeing a lot more postings, it tends to be a trend that the people are growing and planning for growth.
Have you thought of publishing a periodic total for the number of jobs that you have at your site?
Not until just now.
There you go. Matt?
Our leases are generally longer-term leases, so I wouldn't start looking at vacancies in commercial buildings, because those are 5 and 7 and 10-year leases. So that's not going to be a good tell. I would agree. I think it's watch the workforce. If we start seeing some softness in that, and there aren't 3 jobs for every single employee and things like that, that's going to be a pretty big tell. I also just think we all know that everyone watches the stock market. Everyone's watching their 401k. And whether it's real or not, that is the perception of wealth. And if you start seeing that bottom out consistently and make some positive moves, that's going to be a tell.
Yeah, I think it's a combination of, labor market, stock market, and then also rates starting to come back down. I think we're in it for the long haul with the Fed continuing these hikes, but once that starts coming down, probably take it to the bank that people are going to start borrowing a lot more and spending a lot more.
True finance person. Don't fight the Fed.
Yeah, sure.
Great. Thank you.
Just follow the money. Where's private equity going? Venture capital? It's just data, M&A, IPOs. Those are real data points. And then jobs. People hiring will translate into more activity.
Thank you. Brad?
Yeah, I'm in the jobs category as well. I think that's going to be the first place we're going to see it, and that is we may not see great growth, but if it continues the way it is and it doesn't get soft.
Sarah?
You guys. I think it's more for us and working with entrepreneurs, again, the lack of fear to take really bold risks with their inventions. And so hopefully soon we can get a little bit away from diagnostics, not to say that they're not important because they absolutely are, but we kind of had a little influx of those ideas. But I think now we're starting to, even now, get glimpses of some really great ways to solve public health problems.
Thank you. Secretary?
People buying better wines. That'll be important. No, two
Have
things.
you seen our selection? Just kidding.
You mean the box? I saw the box out there. No, I've got two thoughts. One, more people going back to the office. I mean, I'm old school. I just think it's baloney. We've gone from telework to tele-everything. I don't even know the difference anymore. All I know is when I'm on the road, I say, where are all these cars coming from? If there's only 10% of the people in the office, where are they going? I mean, it's a lifestyle. Telework's become a lifestyle. And I would say it might be an indicator, less political name calling. You know, that there's some grown-ups show up somewhere and show some level of maturity and high-level thinking, and it's just not about finger pointing. Because they have something more important to do.
Right.
That's why I'm saying less political name calling, because there's something more important going on. But thank you, Louis, for
Thank you.
putting this all together.
Thank you very much. It's been an interesting hour and 15 minutes. Thank you very much. If we would...